Hey everyone, in this video I was going to do a comparison of the best dividend stock to buy, comparing Verizon versus 3M, both of which pay a very healthy dividend yield. I wanted to compare the two and answer for you which one of them is the best dividend stock to buy right now, starting with a review of the big picture items from their most recent earnings report, and then I'll compare valuation and longer term items. And at the end of this brief video, I will answer which one of them is the best dividend stock to buy. Let's start with Verizon, which revenue decreased by 1.9% in the first quarter, and earnings per share fell by 11% year over year. Long-term debt of $141 billion at Verizon is a major concern, although its strong cash flow from operations means it can go ahead and service that debt. It's not a huge risk just yet, but if the Federal Reserve raises interest rates higher and leaves them there for longer, the longer interest rates remain high, the bigger a risk Verizon's long-term debt becomes, because that debt is going to start coming due and Verizon's going to need to start refinancing that debt, and it will start needing to refinance at much higher interest rates. So that's something to look out for Verizon. 3M had revenue of 8 billion in the most recent quarter. That was down 9% year over year. Its adjusted earnings per share was down to $1.97 from $2.63 in the same quarter the prior year. The company's announced major cost cutting plans. They're going to cut 6,000 jobs on top of the 2,500 jobs they already cut. So they're trying to bring costs down so they can boost profitability. Of course, the big risk for 3M is a legal issue that could cost the company billions of dollars. That's something to keep an eye out for. A negative decision, a negative settlement in that area could be a big boost, a big downward revision on valuation for 3M. Looking at more longer term items, you can see the operating profit margin over the trailing 12 months. And let's take this back further. Let's go back 10 years. The operating profit margin has been going in the wrong direction for 3M. They were going neck and neck with Verizon up until 2017. And then 3M's operating profit margin just started to move downward at 11.86% most recently, compared to 22.2% most recently for Verizon. If we look at the dividend yield, which is something that a lot of dividend stock investors are interested in, Verizon's dividend yield is 7.21%, compared with 3M's dividend yield of 6.04%, each of which is a very attractive dividend yield considering and comparing with the government 10-year bond, which offers you around 3.5, 3.6%. Finally, let's look at the valuation and see which stock is more expensive. And looking at the forward price to earnings ratio, 3M is trading at a forward PE of 10.36, compared with Verizon, which is trading at a forward PE of 7.629. So Verizon has done a better job earning a higher operating profit margin longer term. Its near term prospects, I believe, are better than 3M, given that its business is relatively resilient, although competitive pressure is significantly higher for Verizon, given that T-Mobile is really pressuring the two big players in Verizon and AT&T, offering lower prices with similar or higher quality and better coverage, and it's really taking market share away from the bigger players and also forcing them to compete with T-Mobile, lowering prices, offering better promotions, which could bring down Verizon's profit margins longer term. Given the near-term competitive pressure and the significant amount of debt, if I was to pick one of these two dividend stocks to buy right now, I would rate 3M's legal risk lower than Verizon's $140 billion of debt. That's a massive amount of debt, and the legal issue is not likely to be that big of a magnitude comparatively speaking. So if I was to pick one of these two dividend stocks to buy today, it would be 3M. All right, that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.